A voice with the weight of wisdom, experience, and a strong faith in the future offers a message that is hard to ignore, one that could potentially transform your financial path. In this compelling video, Cathie Wood explores the mysterious message about the future of Tesla and electric vehicles. It's a plea, a call to action, and a promise of something extraordinary. However, I don't think it has anything to do with the strike. Rather, I believe it has everything to do with a shift in consumer preferences towards better, more affordable electric vehicles. Since Rishi Sunak is delaying targets to phase out internal combustion engines by 2030, are we being unrealistic about this transition and how it will be accomplished? The complaint we hear is that people cannot afford these vehicles. However, Tesla is leading that price decline simply by passing cost reductions on to its customers. No, we don't believe that. Thus, the total cost of ownership is something we do know. It's a little different here in the United States, but roughly 2 or 3 years ago, the total cost of ownership for an electric car dropped below that of a gas-powered car. Yes, with regard to local variations, as I mentioned earlier, but yes, in the US, that does include insurance. In fact, Tesla is willing to provide insurance because it is so confident that there will be fewer accidents and fatalities involving its cars. Therefore, yes, that does include everything we have consistently invested in the long run. What was a really smart approach was derailed by a sharp rise in interest rates. Come along as we unravel the riddles of Tesla's stock, the entire cost of owning an EV, and the state of the economy. Looking ahead, how precisely does she want you to use those Tesla shares? And as we delve further into the realm of Tesla and electric vehicles, what mysteries lie in wait? Revolution, as we make our way through this financial maze, will reveal the enigmatic appeal of Tesla's stock with a decline in big incentives and a visionary's everlasting faith. We'll also discuss tactics, obstacles, and the steadfast conviction that's enthralling investors worldwide. Are you prepared to take this thrilling adventure? Travel with us. The voyage ahead is fraught with opportunities and detours, but it also holds the possibility of insight and perhaps revelation. For the disclosure, are you prepared? Pay attention. Don't miss this fascinating voyage into the finance and innovation worlds by subscribing. Let's get started in the realm of electric automobiles, and welcome to Tesla Stock News. The emphasis is on the EV market as a whole rather than just Tesla. The recent events in Detroit, it might affect Tesla, particularly in terms of reduction if a strike results in possible shortages. But the wider picture indicates that changing consumer tastes favoring reasonably priced electric vehicles are the main drivers of this transformation, rather than labor issues alone. Leading this shift is Tesla, which continuously lowers prices by transferring cost savings to its clients. Some could contend that, for example, in the UK, electric cars are still regarded as pricey. Rishi Sunak, the Exor's chancellor, made the decision to push back the date of internal combustion engine phase-out from 2030 to 2035. Discussions concerning the viability of this change have been triggered by this move. Some have questioned whether consumers can actually afford to switch to EVs. But let's take a closer look at something that's sometimes missed in this discussion: the overall cost of ownership in the US. This viewpoint has already experienced a substantial change. The adoption of electric vehicles has reached a tipping point, whereby they are now both economically and environmentally beneficial for drivers. Even after accounting for insurance, the overall cost of ownership of an electric vehicle, EV, has decreased relative to a conventional gas-powered car. This change reflects how the affordability of EVs is changing. The market leader in electric vehicles, Tesla, has increased this affordability factor even further. They include insurance as part of the ownership package because they are that confident in the dependability and safety of their vehicles. This special service not only makes life easier for Tesla owners, but it also makes picking an electric vehicle more alluring. For individuals thinking about making the move to electric vehicles, it's a strong argument. The decision to prolong the phase-out of internal combustion engines in the UK raises legitimate concerns about the viability of the transition. But it's important to acknowledge that times are changing and that, in the US in particular, the total cost of ownership has shifted in favor of electric vehicles, making them not only a wise financial decision, but also study and a company-specific first principles methodology. Industries will. Watching the Federal Reserve's moves given the extraordinary state of the market. Underperformance in 2021 was brought on the expectations of rising rates, and this underperformance grew in 2022. Thus, the issue is raised. In light of these depressing quarters, how will renowned investor Cathie Wood's approach change? What modifications does she make to her approach in light of the dynamic macroeconomic environment, particularly the obstacles brought forth by the pandemic? It's significant to highlight that, even in difficult circumstances, Cathie maintains her steadfast trust in innovation. She believes that innovative ideas flourish in precisely these kinds of difficult settings. Her portfolios are outperforming because they are gaining market share in an increasingly difficult environment. In recent years, increasing profit margins and concentrating on revenue growth have been key components of the recovery road. Retirees with significant money have demonstrated steadfast faith in Cathie Wood's methodology. These people, who are sometimes referred to as old farts by others, have made significant investments in cutting-edge technology and businesses like Apple. They have profited from their investing choices because they have opted to disregard the chatter on financial TV or radio. Can the Cathie Wood method continue to be successful for the next 1, 3, or even 5 years, given the volatility seen in recent years? Cathie thinks we're past the worst of the interest rate spike, which had a big effect on performance. She says that her approach is now ready for the mainstream, and her conviction is further supported by the recent acquisition of Rises, a business in Europe and the UK that focuses on the global megatrend. Cathie points out that the seeds for the current market dynamics were sowed during the IT and telecom bubble of the early 2000s. Even if Tesla's growth may be slowing down, it still has room to develop at a competitive price. Tesla's stock is more appealing since it is currently more affordable than it was a year ago. Furthermore, a number of facets of Tesla's operations, like fully autonomous driving attempts to save costs and obtain insurance, are devalued. With its expansion and continued pursuit of its 2020 Battery Day ambitions, Tesla is well positioned to attain higher profits, rendering it a compelling investment opportunity. Based on the projected growth trajectory of Tesla over the next 10 years, strong revenue growth is anticipated, even exceeding the management's aggressive 50% forecast. At the current stock price, this perspective offers investors an alluring opportunity. It's crucial to remember that Tesla only achieved a respectable 40% growth in deliveries in the most recent quarter, falling short of its internal goal of over 50% growth. We require more openness from Tesla, in-depth research, and future direction from the company in order to have a better understanding of its potential. Investors could better match expectations with reality with the aid of such information. Although impressive, management's declaration of a multi-year, 50% year-over-year growth target lacks the specificity that investors frequently want given Tesla's growing size. Given that Tesla now produces over 1.3 million cars a year, there is an increasing sensitivity to changes in the economy. Consumer demand is susceptible to even small economic downturns, hence annual targets and guidance should be more specific. Investors are eager to have faith in the accuracy of these growth estimates since high-growth firms, like Tesla, are especially vulnerable to valuation movements based on minute adjustments and growth rate assumptions. Let's now explore the incentives that may be required to lure us in as customers. So, the question is, will there need to be pricing adjustments? It's possible that Tesla will carry out small price reductions in order to guarantee that more of its cars, specifically the Model 3 and Model Y, would be eligible for the tax credit for inflation reduction. This tactic might be crucial for surviving a downturn in the economy. Simulating robust demand growth is a crucial strategy for Tesla. How do they intend to accomplish this? They are, however, thinking about lowering the price of their platform in the upcoming year. The goal of these cuts is to create organic demand growth, which is an essential part of Tesla's expansion plan. While reaching an amazing 1.6 million deliveries in 2023 is the aim, let's face it, this is a realistic estimate. Even though Tesla had previously said that they expected to grow at a rate of 50% over a number of years, the real world frequently takes unexpected turns. Market dynamics, unforeseeable obstacles, and worldwide economic conditions all come into play. In a quick-paced world of finance, even though Tesla might not always deliver on its videos, aspects of Tesla should onlookers be paying particular attention to. Two elements are crucial. First, watch Tesla's growth rate closely as 2023 approaches. With a projected 24% growth in deliveries for the upcoming year, a double-digit growth rate is still anticipated. Think about the profit metric second. Tesla has demonstrated strong profit margins in the past, and more could be possible as production is being ramped up in locations like Austin and Berlin. Furthermore, in more recent news, ARK Investment Management, led by Cathie Wood, made a bold declaration of trust in Tesla. During the first U.S. trading session of the year, Cathie Wood's ARK Investment Management made a significant move that demonstrated their continued support for Tesla. They demonstrated their significant conviction in the long-term potential of the company by acquiring more than 176,000 shares of Tesla. Following quarterly deliveries, Tesla's shares took a beating and fell by 12%. This investing decision follows. Even if the firm provides generous incentives to increase sales, ARK's persistence in accumulating Tesla shares since October 3rd shows their belief in the pioneering electric automobile. This calculated action is in line with ARK's outlook for innovation and technology in the future. Let's now examine the larger picture. Like many other companies, Tesla had its share of difficulties in the previous year. The stock worth of the corporation dropped by an astounding 65%. This reduction was caused by a number of variables, the two main ones being inflation and rising interest rates. The demand for electric vehicles has been significantly impacted by these macroeconomic considerations. It's clear from evaluating the scenario that Tesla's journey has been rocky, just like the stock market as a whole. We've looked into the world of Tesla and its prospects for the future. The investment decisions made by powerful organizations like ARK Investment Management highlight the conviction that, despite the obstacles, Tesla's innovative ability and dedication to sustainable transport solutions continue to be a driving force in the industry. The story of Tesla's resilience and the faith of investors like Cathie Wood's ARK Investment Management makes it a compelling narrative in the constantly changing world of finance and technology. We have looked at Tesla's tactics and difficulties, as well as the resolute faith of powerful investors like Cathie Wood's ARK Asset Administration. We've also looked at how affordable electric cars are, noting that the UK is continuing to phase out internal combustion engines, and that it's crucial to take the US total cost of ownership into account. Not only are electric vehicles, including those made by Tesla, an environmentally responsible alternative, but they are also becoming more and more affordable. What do you think will happen to Tesla and electric vehicles in the future? Do you think that the total cost of ownership will impact the way that EVs is adopted market? Please share your thoughts and viewpoints in the comments section below. Please take a moment to like and subscribe to Tesla Stock News before we finish. We'd appreciate you coming, and we hope to see you in more of our